Hi guys, welcome to another episode of whatever this is called. Thank you for being here. What better time to talk about budgeting than now? It's salary week. In my previous video, we talked about what budgeting is and what budgeting can do for you. And I'll do a quick recap of what we talked about. We said budget is the analysis of money earned, money available, and what it ought to be spent on. Emphasis on ought to be spent on. Budget is not the analysis of money earned or money available and what money was spent on. You don't do budget after spending. You do budget to guide you while spending. And we also explained in details 5 things budgeting can do for you. And one of them is it will make you be in control of your finances. Having learned what budget is and what it can do for you, I think it makes so much sense to know how to do it, because this is not the first time we are actually hearing budgeting. But then many people are like confused. They don't necessarily know how to go about it. I am here today to help you, give you 10 steps on how to budget. And trust me, you want to watch to the end because step 10 is the most important step. So let's get right into it. Step 1, my favorite step, be honest with yourself. It takes a lot of honesty for you to actually get into the act of budgeting. If you're not honest with yourself, honest about your income, honest about your expenses prior to doing budgeting, you are setting yourself up for failure. So step 1 is be honest with yourself. If you are earning 500k, tell yourself you are earning 500k. If you have a side hustle that is paying you extra 75k, don't lie to yourself that you are not earning that money. Let your Excel sheet, which is the tool you'll be using for budgeting, by the way, let it know that you are also earning 75k. So the total income that you have is 575k. Please take step 1 seriously, because it will set the trajectory of this your budgeting activity. Step 1 is what? Be honest with yourself. And step 2 is be ready to do the math. Remember, I told you that all of you that went ahead and studied political science, or those of you that take pride in being a lawyer, or those of you that were excited about being an English student, running away from maths, good news, you'll do maths again, because step 2 is be ready to do the maths. It's a lot of mathematics, trust me, not the Pythagoras theorem kind of mathematics or differential equation or integration and all the like. It's just plus and minus, honestly speaking. And if you want to do gymnastics, Excel got you covered. Just some functions here and there. You need not write it. They will say templates. There are templates everywhere, and I can provide you a template that would make this as seamless as possible. But then know your numbers, plus and minus. I do not expect Excel is going to malfunction with addition and subtraction, but just in case Excel malfunctions, you can tell by looking at it, because you know how to plus 1 and 2 and know how to subtract 4 from 6. You get me? Step 3 is identify your income sources. You see how this ties closely into step 1. If you're not honest with yourself, step 3 will be shaky. So at step 3, you identify your income sources. Know your primary sources, know your side gig sources, know your daddy dash me, mommy dash me, uncle give me, husband borrow me, wife dash me, and all of that. You have to identify your income sources, and that is step 3. Step 4 is going on a date with your statement of accounts. This step is very important. This is where you analyze your past so that you can for a better plan for your future. Go on the date with your statement of accounts. It might be very bulky, or you need to run your fingers through those numbers to identify what you have spent your money on. And too bad for those of you that have like 5, 6, 7 accounts. If you want to do this the right way, you have to be honest with yourself and get those bank statements and look through the numbers. Maybe analyzing 3 to 4 months ago will do just the work. You don't have to analyze since the day you started using the bank account. Step 5, categorize the spends that you have identified from looking at your statement of account. Now, mind you, when you are doing step 4, don't just look at it casually. You are looking at it with your biro, your pen, your paper, and all those things. Taking note of the prominent spend. Oh, tithes, offering, gave to Shupo, you went to ShopRite, POS withdrawal, POS, and the many POSs like that. Try as much as possible to remember those things. Then categorize the spend. I hope your memory serves you well to know what POS spend is what. But step 5 is categorizing your spend. There are two types of expenses: your fixed expenses and your variable expenses. Fixed expenses are those expenses that rarely change, and if they do, just by some few thousand. And variable expenses are expenses that change every now and then. One fixed expense is your rent. Another fixed expense is paying off your debt if you have some debt to pay off. While variable expenses are those outings to the restaurant, seeing a movie, and buying ice cream and pizza and all of that. Those are variable expenses. You can categorize these things and say some are wants and some are needs. Needs are most likely fixed, while wants are most likely varying in nature. Step 6, set realistic spending and savings goals. This step is just as important as step 1, 2, 3, 4, and 5. You have to set realistic savings and spending goal. I know the reason you want to do the budgeting is so that you can save and all of that, but budgeting is not going to necessarily help you save magically if you do not set realistic goal. There is something they call SMART goal. You know that kind of thing, right? Make sure the goal that you are setting is realistic. If you have observed that you spend so much on pizza and ice cream, it is only realistic that you tell yourself you will not spend as much than telling yourself you would never buy ice cream or pizza again. So you get a drift of what I'm driving at. Set realistic savings and spending goals. When setting your spending and saving goals, remember to prioritize. Want always comes last. Need takes preeminence. Remember, wants are wants and they should always come last. And also in setting your goals, identify what your short-term goals are, your long-term goals are. Short-term goals are like ones that you can quickly achieve, while long-term goals are like goals that will take like years for you to achieve. One long-term goal that I think should be in your budget is saving goals for your children. I mean, you're not pregnant now, but and you might probably not be married yet, or you will marry one day, or you will have children one day, and you don't want to just bump into that part of your life. You want to get into it prepared, and budgeting is just that one thing that is going to set you on the right track. So it's a long-term goal, and you have to like start planning towards it now. Step 7 is my favorite step. It is plan. And in planning, there is no vibes, there is no emotion. You plan with what matters to you the most. It is where the real business happens, where you know the percentages that you are allocating to what and what. And while you're planning based on what matters to you the most. And with this, there are 5 budgeting systems that you must know. I wasn't talking about it here. I'll talk about it in part 3. So make sure you are here again to know what those systems are. And also, we'll be talking about the tools that you would use, because it is important that while you're planning, you also know the tools that you would use even for this budgeting. Step 8, adjust where necessary. I mean, very nice to have step. Adjust where necessary. Don't start with 25% savings if you can't afford to do that. Start with 10, then you can adjust. Percentages is 100. Percentage is 100. Yeah. Break it out to what your salary can afford now, what your income can afford now, and as you grow, you can adjust it here and there. It is not bad if 80% is for feeding for you right now, but then as you grow, you can adjust that to 60%, then the remaining 40 is distributed across other things. So step 8 is adjust when necessary. This is business proper, because you'll be reviewing every now and then, not every 2 months, to say every 6 months, every year. You adjust this thing as your income grows or your capacity increases. Step 9 is going to do you so much good, and it is get an accountability partner. Get an accountability partner. They will keep you accountable. Start this journey with someone. Don't do it alone. I mean, you want to make sure everybody in your circle, everybody in your yard, they can manage their money so that your money can breathe. So tell them you are starting a budgeting kind of lifestyle. They should also start with you, and so that all of you can spend your money for yourself and use your money for, I don't know, anything you like. But moving on, step 10, the ultimate step, guys. Step 10 is stick to the plan. Stick to the freaking plan. That's step 10. If you don't stick to step 1 through to step 9, wetin you gain? I mean, the most important thing is that you are sticking to this plan, staying true to yourself, being honest, analyzing your sources of income, planning accordingly, understanding your spend, going through those bank statements. You just have to stick to the plan, guys. That's the most important step, because if you don't stick to the plan, we'll be back again on this video, and I don't talk about this again. Like, I want you to just stick to it already and pass this information on to your children and to your children's children and to your children's children. Stick to the plan, guys. So there you have it, guys. 10 steps to budgeting. See you in the next video. Bye.